Today, we're going to talk about the monthly payment, all right? So if you didn't already know, your monthly payment is made up of 4 parts. P-I-T-I, that is principal, interest, taxes, and insurance. Principal refers to the amount of money that you borrowed, okay? So let's just say, in order to purchase your house, you borrowed $100,000. When you pay your monthly payment, you're paying some money down on that $100,000. Next part is interest. Interest is the money that you pay to borrow money. What do I mean by that? It's a fee that you pay for borrowing someone else's money. You don't just get to borrow $100,000 and pay back $100,000. You borrow $100,000 and you pay back more. So together, the principal and the interest make up the mortgage payment. If you have a fixed mortgage, then that's pretty much going to be the same for the life of the loan. What will change, however, is how much money you're actually paying towards the principal versus how much you're paying toward the interest. So let's say your mortgage is $1,000. Maybe in year 1, you're paying like $800 toward interest and $200 toward your principal. But by year 20, perhaps you're paying $300 toward your interest rate and $700 is going towards your principal. Next on the list is T for taxes. That's in reference to your property taxes. Each month, your mortgage company will collect a small portion of your estimated taxes for the upcoming year, and they will place it in an escrow account. That escrow account is basically a savings account for your taxes and your insurance. And when the bills are due for the taxes, when it's due for the insurance, the mortgage company will pay for either your taxes or your insurance out of that account. If, for some reason, your escrow account has a shortage, the mortgage company will let you know. They'll do an escrow analysis and they'll say, hey, you've got $3,000 in your escrow account. The taxes are going to be $4,000. You can either pay a $1,000 lump sum and keep your monthly payment the same, or we'll increase your monthly payment to cover the cost. So that escrow shortage will be paid either in a lump sum or spread out over many months. If you spread it out over many months, your monthly payment will go up because not only are you paying your regular payment, but you're also paying the money that they use to cover your shortage. I had an example that I used in the original video that I don't think was super clear, so I want to put this example here now. Let's say your original monthly payment is $1,200. That's $1,000 for principal and interest, and then $200 for taxes and insurance. But since there was a shortage and you have to pay more money towards your escrow account now, maybe your taxes and insurance payment is $400. So now you're paying $1,000 for principal and interest plus $400 for taxes and insurance. Your payment started at $1,200 a month, but now your monthly payment has gone up to $1,400 a month because you have to pay extra money into your escrow account. The next part of your payment is the insurance, and it's paid a lot like the taxes. It's collected in little bits over many months. It's put into an escrow account, and when the bill is due, the company pays on your behalf. And if the policy has increased, well, now your monthly payment is going to also increase. Okay, just a quick recap of what we talked about. Your monthly payment is made up of 4 things: principal, interest, taxes, and insurance. If you have a fixed mortgage, your principal and your interest will stay the same for the life of the loan. Your taxes and insurance, however, will vary each year. So your monthly payment can vary. Your mortgage will stay the same, but your monthly payment can vary because of the taxes and the insurance. Most cases, your taxes are going to go up, and that can cause your monthly payment to go up. You can get ahead of this by putting a little extra towards your escrow account after you make your regular monthly payment. Don't forget to like, comment, and subscribe, and hit the bell notification so you know when I post new videos.